You see a headline about a few $1 million leaving a country like Sri Lanka, and you probably scroll right past it, right? I mean, it doesn't seem like a huge deal. But what if I told you that little headline is actually a clue, a thread in a much bigger, much more fascinating story about how our global economy is all tangled together? Well, let's follow the money and see just where it takes us. So here's the mystery we're trying to solve. Why would investors all of a sudden get cold feet and pull their money out? The answer, and trust me on this, is not at all what you'd expect. Okay, so it all kicks off with this number, a net outflow of just over $5 million from Sri Lankan government bonds. And this all happened in a single week ending December 24th. I mean, on the surface, that sounds bad, doesn't it? Kind of like a big red flag. And you know what really made this number so jarring? It was a complete U-turn. For weeks, investment had been flowing in. Things were looking great. Then bam, the money starts flowing out. The easy conclusion here is, uh-oh, something must be going wrong inside Sri Lanka. But that's not the whole story, not even close. All right, so to really get what's going on with that $5 million, we gotta zoom out. You can't just look at 1 week in isolation. A single week is just a snapshot, right? We need to see the whole movie. Let's look at the bigger trend. And wow, when you do that, the story just completely flips on its head. See, that little outflow, it's basically a tiny ripple in a much, much larger wave of investment that had been pouring into the country for the past 17 weeks. Yep, you heard that right. Over those 17 weeks, Sri Lanka actually saw a net inflow of $111 million. All of a sudden, that $5 million dip doesn't look like a crisis at all, does it? It's more like a tiny blip on a much, much bigger positive trend. And hold on, because the story gets even better. This positive trend isn't just some recent stroke of good luck. If we pull the camera back even further and look at the entire year, well, the picture gets even more impressive. Over the past year, Sri Lanka has attracted a total inflow of $231 million into its bonds. So here's the bottom line. Sri Lanka has actually been doing a fantastic job attracting foreign investment, which brings us back to our original mystery, but with a new twist, right? If things were going so well, why did any money leave at all? Well, it turns out the answer has almost nothing to do with Sri Lanka itself. Nope. The real reason for that little outflow is happening thousands of miles away. It's all about the decisions being made by global investors reacting to worldwide events. To get this, we have to talk about something called a safe haven. It's a really important idea. Just think of it like this. When the global economy feels like a stormy sea, investors get scared. They don't want to risk their ships, So they pull their money out of anything that seems risky and they sail it into a calm, safe harbor, things they believe will hold their value no matter what, like gold. So here's exactly how the chain reaction went down. First, the U.S. Federal Reserve starts dropping hints about maybe cutting interest rates. To big investors, that can be a signal of economic uncertainty ahead. So what happens? They get nervous. And when investors get nervous, they run to that ultimate safe haven we just talked about, gold. The demand for gold shoots up and its price hits a record high. But wait, to buy all that gold, they need cash. So where do they get it? They sell off other assets, including, you guessed it, a small slice of their Sri Lankan bond. And look, this isn't some freak event. There's a clear pattern here. You can see it on the timeline. Go back to April. A tariff declaration in the U.S. causes a $32 million outflow from Sri Lanka. Fast forward to December, speculation about the Fed starts up, and boom, gold prices surge, and we see our $5 million outflow. It's a perfect textbook example of global shocks creating local impact. But hold on, this story isn't just about a small country getting tossed around by huge global currents. Not at all. Sri Lanka has its own playbook for navigating these stormy seas. So let's take a look at their local strategy. Okay, so this is really the heart of the whole story. It's basically a giant game of tug of war. On one side of the rope, you have these powerful global pressures, like US Fed policy, pulling money out. But on the other side, you have Sri Lanka's own local policies designed to pull money in and keep the economy stable. And guess what? According to the analysts, this strategy is working. By using what are called deflationary policies, which generally means doing things like raising interest rates to slow down inflation, and by controlling imports, Sri Lanka has created a more stable economic environment. And that stability, that's what international investors find so attractive, even when the rest of the world feels shaky. And, the results of this strategy are just stark. Look at 2024. The country saw a massive outflow of money. But then in 2025, they've completely reversed that trend, bringing in a huge net inflow. It's an incredible turnaround, and it's really a testament to the success of their local playbook. All right, so we've put all the pieces of this puzzle together. We've seen the scary headline, the bigger trend, the global forces, and the local strategy. So what's the one crucial point we should walk away with? It's this. A country can do everything right. It can run a smart, successful economic strategy, but it will always, always be tested by these massive, powerful financial currents that sweep across the entire globe. The story of that $5 million outflow isn't one of failure. It's one of resilience in a connected world. And that leaves us with a final, bigger question to think about. In a world where a decision made in Washington can cause ripples in Colombo, how much control does any single country truly have over its own economic future?